Good morning, students. How are you all? Hope you all are fine in your houses. I am also fine, students. So, from July onwards, we are planning to conduct a Zoom and video classes. Okay, for this one, I have planned to take the fourth lesson again. Okay, from the beginning, I have decided to teach. Okay, so that fourth lesson is ledger. Okay, it's already I have taught in the that this date 24th of June. Okay, but again I am again starting once again. That what is a ledger? So it is the second process. That means posting. After journalizing, the second process of accounting is posting in the ledger account. So first we should know what is ledger account. Okay, so here ledger account, what is ledger account? It is a summary of all the transactions relating to one person or one item or one asset or one liability. Okay, any one item, either income or expense. Okay, so all the information will be gathered at one place. That is called ledger account. Here we can see the net effect of that item. For example, if the details of a customer is given, the net effect, that means how much we have to receive from that particular customer, will be given clearly. That means when we balance that account, we can come to know what is the net effect of that account, or the purchases total, what is the total purchases of that particular month or that particular day. Okay, when we close, we can find out what is the total purchases of that days or that week. Okay, so net effect of that account can be found out. So this we should say this is the second stage in the process of accounting. First process is preparing journal entries, isn't it? This is the second process, preparing ledger account. So we can say it is the principal book. Ledger account is also called as the principal book of accounts. Okay, here we can see that all accounts, we have learned three kinds of accounts, isn't it? Personal accounts, real accounts, and nominal accounts. So all these accounts, net effect of transactions can be found out on a particular day from the ledger accounts. Okay, then net effect, and that net effect will be written under trial balance. All the balances of the ledger account will be shown in the trial balance, and this will serve as the basis for the preparation of financial statements. What are the financial statements? The trading and profit and loss account one, the other one is balance sheet. Okay, so here how we post this one in the ledger account? In chronological order. Today if we prepare the journal entries, then transactions will be entered in the chronological order of occurrence, but that posting ledger account preparation is based on the account wise. First account, if we receive cash on cash sales, cash account will be there, then cash account that are two sales account. So first we will post cash account wise only we will do the posting. Okay, then second one only we will post sales account. Okay, then it is a bound book. Ledger account is a bound book, means a big book. Okay, like 200 page, 300 page. Here this one around maybe 1000 pages, 2000 pages. Okay, it will be a book, big book, a bound book having many pages, and each page, okay, each page means both the pages. Okay, we have to prepare account, not like journal entries preparing one page. Here two pages are used, so one full page will be used for one particular customer or for particular asset or anything. Okay, then the same page only we will enter till it get closed. Then sometimes they may leave 4 or 5 pages, afterwards only they will start the next account. Okay, so Then once it gets over, they will keep this book as the reference and they will buy another bound book. Or some organizations, they will use loose sheets. Okay, loose sheets they will use. There they can add some pages if they want. Unlike the bound book we can never add any pages. But in the loose sheet, we can add some more pages whenever we need to insert. But practically nowadays what is happening? Computerized accounting is followed. Here only the journal entries must be prepared. What is debited, what is credited for a transaction. Once we debit a particular account, automatically that account will update everything. It will post in the cash account. For example, cash account debtor to sales account. Cash account will be posted in the cash account and it will balance. And it will show the balance. Then afterwards, if we click cash account, it might be already posted there. Okay, in the same way, sales account also, it will enter in the sales account. Then everything, trading and profit and loss account, financial statements, everything will be updated. Everything will be done automatically. Okay, if we open that one, we can see up to that today, what is the balance sheet, what is the profit and loss account. Okay, we can find out. Now the utilities we will learn. What are the utilities means? What are the uses of ledger account? Okay, here quick information about a particular account can be got. Okay, quick information within that means once we open that ledger account, we can find out everything. Okay, for example, sales account, how much we have made cash sales, how much credit sales. Okay, everything we can find out. Then a particular customer account name, if we post in that ledger account, how much he has paid for us last month and how much is the remaining amount that he has to pay for us. Everything can be known. Okay, quick information about a particular account can be known. Then control over business transactions. Okay, control over business transactions. Here everything, all the transactions will be posted and we will come to know a particular item if it shows more expenses or it shows less income. We can analyze about a particular account balance, why this much, or sales very less, or purchases more, sales less. Then we can analyze, okay, stock is more, so how to sell out this stock, they have to find out a solution. Okay, so we can have control over a business transaction since we have the ledger account. Then we can prepare, the trial balance can be prepared. Okay, trial balance, we know the balances of ledger accounts will be summarized in the trial balance. Okay, all accounts balance will be written in one place. There, some accounts will be debited and other accounts will be credited. So once we add this ledger balance, trial balance total column, if it gets tallied, then we can conclude that that arithmetical calculations are accurate. Okay, it's correct, we can conclude. Okay, so that can be found out. The trial balance, from the trial balance we can check the arithmetical accuracy of the journal entries. Okay, then the last one, it helps to prepare the financial statements. We know the financial statements are income statement and balance sheet. Income statement means trading and profit and loss account. Then the balance sheet. Here, to prepare this financial statements, what is the basis? The ledger account. From the ledger account, we are preparing trial balance. From the trial balance, we prepare the financial statements. Okay. Now, we should know the format of a ledger account. Okay, soil, one customer's name, account. Okay, so here 2 pages must be used. Okay, this one left side. Okay, 4 column. Right side 4 column. Okay, left hand side that page debtor dr. Here right hand side end cr. Then two column will be there. Okay, there particulars. Here first date particulars. Here JF, one small column JF. Then in your page 2 amount column will be there. You must use only the second amount column. First amount column, inner column you should leave. Then in the next page date, then particulars, then one small column JF, then the last amount column rupees. Okay. Then here date we know. First we will write the year, then we will write the month. One small column there we will write the date. Okay. Then debit side if we post, for example, cash account, choice account data to sales. It's on credit sales. Okay. So choice account data to sales account we have to write. Then JF means journal folio. Journal where that in the book, the journal entry book where we have entered that page number for reference we will write here. There at the same time when we post that journal entries, that particular account in the ledger account, we should write this account, the size account page number in the LF column in the journal entry. Understood? Now the amount we should write. Now another account, another entry. Here you just imagine cash account data to sales account. He is paying cash. So we receive cash. Here SA is credited. So credit side by cash account we should write. Okay. That is the format of ledger account. Next one, the differences between the journal entry and the ledger accounts. Okay, journal entry and the ledger accounts. Here, when we enter the journal entries, recording. Okay, that's the first heading, recording. When we record, as and when the transactions take place. Okay, we will make the journal entries in the journal. Okay, here posting ledger account will be done either daily, maybe in the evening, okay, or weekly, weekend, or fortnight. Fortnight means once in 2 weeks, or maybe monthly. Okay, that is the recording. When we record here, as and when takes place. Maybe today 10 transactions, all the 10 first which transaction will take place, that one they will enter. Okay. The second one, stage of recording. So we know it is the first stage of recording journal entries. That posting in the ledger is second stage. Okay. Third basis, order of recording. In which order we will record the journal entries? We know in chronological order or the order of occurrence. Okay. But here it is done on account wise. I taught you. Okay. Account wise means first which account? Cash account. Second capital account. Then bank account. Then cash account, like that. Okay. But cash account twice comes. We will post everything in one place. Okay. So here it is in chronological order. Here account wise. Then fourth one, process. Okay. In the process, this is called journal entry. Preparing journal entry is called journalizing. Okay, here process of preparing ledger account. Okay, that means they are recording the process of recording in the ledger account is called posting. Okay, then it facilitating the preparation of trial balance. Whether it will facilitate the preparation of trial balance, journal entries, no. It won't facilitate the preparation of balance sheet, trial balance. But here we can prepare from the ledger account balances. It facilitates for the preparation of trial balance. Okay. The basis of entries. Here, on which basis the entries are made in the journal? Journal entries are made on the basis of the source documents. Okay, with the help of invoice or voucher or pay-in slip with the bank, okay, or withdrawal form or check. So with that base, that source documents only, we will prepare the journal entries. But here, Which basis? On the basis of journal entries, we will post them in the ledger accounts. Okay. Then the last one, the net position. Net position of an account cannot be known from a journal entry, but a net position of an account can be found out from a ledger account. Okay, that means how much is the balance. Here no, only we will post in the, we will prepare the journal entries. That's all. Okay, this one is also one of the question answer. Okay, 3 mark. Distinction between journal and ledger. Then now we will learn the procedure for posting. What is the procedure for posting in the ledger account? First we should know what is the meaning of posting. Okay, what is posting? Posting is a process of transferring the debit and credit aspects or debit and credit items from the journal entries to the ledger accounts is called posting. Okay, so here we have done the exercise. Before that, I want to explain the illustration one. Journal entries. Prepare journal entries and post them in the ledger account. Okay, year, month, date. Basu started business with the cash. We know that entry is cash account debtor to Basu's capital bracket. Basu started business with cash. Okay, amount LF column empty. Okay. Second one, purchased furniture by paying cash for 6,000. What will be the entry? Furniture purchasing by, if we purchase asset, we should write only that asset name. So furniture account debtor to cash. Furniture purchased for cash. Then machinery bought on credit from Harish. Okay. Here machinery we purchase. Machinery when we purchase, we should write that asset name only. Machinery account debtor to Harish, because we do not pay the cash on credit. So the person who gives that one should be credited. Then goods bought for cash. Okay. So we purchase goods, we should write as purchases. Purchases account debtor to cash account. Then insurance premium paid. That is the expense name. Expense, debit all expenses. So insurance premium account debtor to cash account. Okay. Now we should prepare the ledger account. First account you see cash account debtor to capital. So cash account. Okay, there everything we have to post in the cash account. First one, year, then month, date, first entry to Basu's capital. You should see that cash account is debited. So debit side, the other account name should be entered. If we enter on the debit side 2, if we post on the credit side, we should write by. So June 1 to Basu's capital 50,000. Then second one, furniture account debtor to cash. So here cash is credited. So credit side by furniture. Okay, year, month, date will be entered. Then machinery, no, the purchases account debtor to cash. Again cash is credited. So that date by purchases account. Then amount. Then cash credited, insurance premium. So cash is credited. So credit side, the other name by insurance premium. Here they have asked us to post alone, not to balance the ledger account. So you can leave writing as it is. If they have asked you to prepare only one account, then you can show that balancing also. Balancing we will learn in the next 2-3 pages. Okay. So you see Basu's capital. What is the entry? Cash account debtor to Basu's capital. Here Basu's capital account we are preparing. It is credited. So credit side we should enter by cash account. Okay. Year, month, date and all that. Then furniture account debtor to cash. So furniture is debited. So debit side to cash. Okay. Then machinery also debited. Debit side to Harish. Then Harish account is credited. So credit side by machinery. When purchases account is debited in the journal entry, so debit side to cash account. Then insurance premium account is debited, so debit side to cash. That's all. Okay. So now we will see the exercise. One small chapter only. Okay, it will be easy. Journalize the following transactions and post them in ledger. Started business with cash, paid into bank, purchased goods from Ram for cash. Journal entry. First one. Okay, journal entry is written date, particulars, CLF, debit, credit. Okay. Cash account debtor to capital, started business. Next, bank account debtor to cash, paid into bank. Purchases account debtor to cash, purchased goods for cash. Now we should post in the ledger accounts. We should write first ledger accounts, then first account cash account. Here half of the account name we should write here, other one we should write here. Okay, both the pages must be included. So cash account debtor to capital account. Okay, so capital account we should write. Then here bank account debtor to cash account. Cash account is credited, so by bank account. Then purchases account debtor to cash. There also cash is credited, so credit side by purchases. Okay, entered the amount and left as it is because they have asked us to post them in the ledger only, not to balance the ledger account. Then second account, capital account. Capital is credited, so credit side by cash account. Okay, then bank account debited to cash account. Then purchases account debited to cash account. That's it. Okay, so you should learn. I have taught this one the second time. Okay, today's portion I have explained in one class, so you can learn this homework. Okay, differences, 1 3-mark question, then exercise 1 and illustration 1 you have to do and see in a notebook. Okay students, thank you very much.